A little book that beats the market. This is The Magic Formula by Joel Greenblatt, of course. Joel Greenblatt is fantastic. I mean, he's had a wonderful track record. He's a great writer. Like, he writes with humor. He writes very concisely. He just gets down to it. It's great. And this book, I mean, it's for those who are familiar with the Little Book series, they're quite small. I mean, there may be 100, 120 pages. So they're quite informative and quite entertaining at the same time.
Which is great. You know, you want to make it the more consumable, you know, the easier it is for even beginner investors to want to get into these things. So
exactly.
Yeah.
Exactly. I mean, I'm sure we've all seen it, but finance books and reading are funny. You almost have like three kind of, at least my experience, three categories. You've got academia, which like academic papers, which is very theoretical. Maybe it's got some good, like very good takeaways, but at times aren't necessarily practical. There might be some other costs that aren't incorporated. You've got the other series of books that are by maybe some practitioners that are very, very showy. There's like 400 pages that talks about a certain strategy, which could have been boiled down to about 50. And then you get kind of this kind of book where it's right in the middle. It's got all the good nuggets. It's really concise. It's accurate. And yeah, these are gold in my mind.
Yeah, thanks, man. Awesome. I agree. When I first got into investing, it was like Peter Lynch's book was easy for either read and digest, and as an example, what you're talking about.
Absolutely. No, that's another good one. What Works on Wall Street, Jim O'Shaughnessy's book. Yeah, great book. So many great factors and strategies. He talks about value, growth, technicals, quality, momentum, combinations. Really, really solid. A lot of what I do is because of this book. So yeah, really owe a lot to Jim. Yeah, I follow him on Twitter. He's great.
He's great on Twitter too. I'm always quoting his study about the returns on that, you know, the smallest wire caps beating the big caps by about 8.2% or something.
Right.
And it's just and you know that's an interesting study, because I always like to say, like, okay, we already have this advantage in the wire cap area of, you know, this that he showed of 8% or so. You know, what if you put you work around that a little bit, you know, and actually try to like do extra stuff to find the best stocks in that kind of universe, and how much could you kind of improve that alpha by, right? Absolutely. And that's kind of what you're doing in your factor investing. We're doing these things to try and continue to build upon that advantage.
For sure.
Yeah,
for sure.
So,
yep.
So he's my go-to stack. when I'm
good.
Yeah.
Good stuff. Some of you may, Thinking Fast and Slow by Daniel Kahneman, Prospect Theory, System 1, System 2 Thinking. This is kind of a real eye-opener for me quite a few years ago. It's just kind of how our prospect theory basically suggests that humans think basically in two different ways. System 1 is very impulsive, very quick, very instinctual, which is great. When we were evolving in the savannas and in the jungles, that came in very handy. Instinctual thinking, or almost instinctual reactions, rather. Where System 2 is more taking a more analytical approach to a problem or a decision. Both have their places. System 1, again, is quick. System 2 is more detailed. It takes more resources from your mind and your body. But I guess the takeaway here for me is that left to our own devices, even in finance, I tend to go to System 1. Like, if something feels right, if a certain headline comes out, oh yeah, that sounds good. You might want to go go make a decision based on that
Right.
in your investing. But this book kind of shows, yeah, sometimes it's better to take a step back, take the time to really think about it, say, is this really making sense? Is this the best way to go? And this is kind of what kind of part and parcel of going into quantitative investing, is because you can actually test a lot of these different theories and ideas. Say, like, does this actually make sense? Is it repeatable? Is it something that can produce alpha over time? Or is it just like something that happened in a particular market regime that was very, very good for a certain factor, which happens all the time. But some of those get headlines and away you go. But no, this is kind of good.
Well, I think, Ryan, too, you make some great points this one, and I think that when I look at my own career and journey, right, it's like I became better when I blended the two together, right? You know, how can you make decisions pretty quickly on, you know, really important things about an investment, right? But how can you actually maybe make decisions quickly sometimes too? You can be a one side of the spectrum. If you're like you're buying every headline, you look at a headline in a release and you buy it, right? You have that impulsive decision,
right? Yep.
Then you have a guy or the person who just never buys because they're overanalyzing things. You know, so how do you get in between? I was having this conversation with a friend of mine yesterday who's very analytical, and he's a great investor, and he understands companies like immensely, like way more than I do, how to get into it, drill down the business. But sometimes that gets you into trouble because you never want to buy anything, you know?
Yep.
And I know that I've learned to be kind of in that middle somewhere. And maybe you get caught sometimes by buying something too quickly. If you're not only quant based, you know, if you're putting some emotion into it or more of a qualitative, you might make some mistakes there. But you know, one thing I wanted to point out, and I'm glad I didn't even know you were going to bring this up. This is great because, like you said, the last 10 years has been tough, or whatever it is, for some of the stuff that we do. The way this kind of like GARP or value-based strategies, and what I've noticed, I stepped back after the 2022 crash, and I said, well, what's going on? What's happening right now? And been waiting for a long time for what the stuff you do and I do, like that worked for me for the first 20 years of my career, was this kind of like, you know, combining momentum with GARP and value and trying to find what makes a stock go up in a short period of time. I forced myself to go back to this thing, these cliff notes, which I do. And I think I've tweeted about it a couple of times, and forced me to make a decision. I'm researching the company. I go down my screen, whatever I'm using, you know, whether it's new highs or whether I'm running a screen, whatever, a fundamental screen, and then quickly analyze that as quick as I can, you know, and get those cliff notes down on paper. And that strategy is working really good. And
excellent.
It's just basically, it's showing you that, okay, well, how can I really force myself, game theory wise, to really quickly get to the most important part of the story of why the stock's going to go up. You know, come back and I'll visit the stock later, right, for risk factors and these kind of things. But so I love you brought this point up over here. How do you marry one and two together to get that perfect blend? I think that's a lifelong journey of doing that, right?
100%. I mean, as an individual, I mean, I guess we're all wired a certain way. There's certain characteristics that are always there, but a lot of that's malleable. It changes with age, changes with experience. Of course, markets change over time. So getting those in line, it won't always happen. You won't always have that sweet spot. So you just have to kind of, learn about yourself, learn how to adapt. And it's fascinating. Absolutely fascinating to me.